Testing, testing. All right. Good morning. Good morning, all. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. It is 9:05 Eastern Standard Time here on Friday, May 20th, 2022. Let's go ahead and get started. Futures, Dow is up 227 points. NASDAQ up 1.24%. S&P up nearly 1% this morning. And Russell up nearly 1.10 this morning, 1794. Crude oil is flat. Gasoline is flat. 109.82 a barrel for crude, 368 a gallon for gasoline. Gold slightly green this morning, 1841. Silver futures are down 0.36%, 21.83. The dollar is bidding after selling off yesterday nearly 1%, 102.97 currently. Yields are continuing to go down. Now we're testing 2.8%. Remember, we talked about that. I do like TLT long. VIX down 2% this morning, 28.74. We're going to go over some charts here in a second. Euro dollar down about 15 pips, 105.67. Dollar yen, 127.84. Pretty much flat. Bitcoin continuing to bid, 30,130. Ethereum performing a little better, nearly 2%, 2028. The commodity index, Bloomberg's commodity index up 0.21% with yesterday's rise on commodities. So a couple of charts I'm looking at this morning. I posted this on the blog first thing this morning. A couple things I want to go over together. I'm going to go ahead and start with E-mini futures. I'm going to kind of do a really chart-centric video this morning, answer some questions. In regards to the news, not much today, but again, if you are interested in being updated throughout the day, G.A.R Capital on Twitter. Yes, we have a Twitter. I love Twitter. Make sure to give us a follow for all the news. That will always be free. YouTube will always be free. Remember that, so take advantage. Okay, let's see. Oh, wow. Sorry, I just saw some Formula One news, and I'm really interested in that. What was it? Charles Leclerc, I think, got pole position, or he has a lap, gives a P1 at the Spanish Grand Prix. Anyways, let's take a look at the S&P here. S&P futures, SPOOs, like we talked about. A couple things that stand out. Well, obviously, we're up 1%. That kind of stands out, right? But first thing you see, obviously, I have lines on the screen. The double bottom that we have, 31.55, 38.56. If you've been following us on the blog, if you're on our Discord, again, if you want to join our Discord, garcapitalfx.com with our blog on there as well, sign up. 38.55, we got to 38.56 on the double bottom. So I said, possible double bottom. I even talked about that yesterday. Now it looks like, hey, all things are good, right? A couple of caveats. Actually, there's a couple of actual scenarios that I talked about today on the blog. This was this morning at 8 this morning. So two scenarios, a bull and a bear one. I know, pretty easy, right? Black or white. Well, there's actually three because you can just get chopped up and just kill your premium and make you want to throw your monitor out the window. Taking a look at S&P futures, so you could see that clear double bottom. The question is, to make this a double bottom, which would be bullish, what level do we need to break in order for this to work out, let's just say? 39.50 I talked about yesterday. That was the neckline for that inverse head and shoulders, which we got to pop, but we rejected. Do you know what we rejected at 41.01? This gap fill. A slight one, but there is one. We had that gap fill Sunday when we had the open. That's an overhead gap. If we fill that, which is a tall order, mind you, you would get to pretty much break even for the week. And we've been, I think now 6 consecutive quarters on the S&P being red. The Dow's about to go to 7. And that hasn't happened since 1928. How about that? Upstart continues to rise too. I just saw that news. I just tweeted it out. So S&P, we have the double bottom. We zoomed in now, and you could see now we have a couple levels to look at here. 40, 43, that's resistance. 39.50. Actually, let's go bring this up. Yeah, 39.50 is your first resistance. I expect this to actually reject. So again, we could go higher to fill this gap fill 41.01. Again, keep that in the back of your mind as a roadmap higher. That would be your big time resistance. But again, in order for this double bottom to work, or if you want to look at it this way, we go ahead and fill that gap. You got to get above 39.50. The problem is that we've been rejecting. So what I'm expecting with Opex, obviously we're getting a lot of short closures. You know, a lot of people are just getting out. They're short positions. They're like, you can only sell so much. I'll sell and we'll move on. We'll see what we get. But we're still in a downtrend, still in almost a bear market, but pretty much a downtrend. So 39.50 needs to break before we can start making any conclusions about being bullish short term. So keep that in mind. 39.50. Here's the issue. Left head, or left shoulder, right shoulder. Not the best forming head, but there it is. And here's your neckline, 39.50. Sound familiar? Yep. So now we're back to a head and shoulder. And last time we had an inverse head and shoulder, we did pop. Left shoulder, head, right shoulder. We popped, rejected that big gap fill, 4101, and came back down. Very tough to trade the tape because this head and shoulders should have gone a little higher, but we didn't. I was expecting us to break 4101 on Wednesday morning, gap up. We didn't get it. Is this going to be the same thing here? 39.50, gap up, and then we reject? Well, head and shoulders tells us yes, a little more downside. And it would fit the downtrend on the daily, obviously. We know that. It would actually fit. So if we go ahead and keep this going, 4101 would break out of that. How do I know that? Let's go ahead and draw a couple of lines. We can draw a line from here to here, kind of not the best single line because I'm running out of room, but again, you break 4101, that does break out of that downtrend. Not perfect, but you could see it. That's why 4101 is such a key level. I don't think we get there today. I don't. But again, it could be there long term. Again, it doesn't have to be tomorrow. It could be next week. Today is Opex, so again, we're going to get a lot of volume. A lot of volatility. Well, not volatility, more volume than anything else. About $1.4 trillion in derivatives expiring today. A lot of money in the line, right? So the question remains, 39.50, do we break it? Well, let's go ahead and go over the roadmap of how we can get there. Let's keep the bullish mentality and the bearish mentality here. Well, the bearish here would be this gap fill, 29 on VIX. Remember, we filled this one, we overshot it, came back down. But now we can fill this one. Maybe we can overshoot that, get us back to previous lows, around 38.60. And I do think we do break, guys. I do think we break. Again, I'm still waiting for 3750 S&P. We're not there yet. We're about 180 handles, maybe 170 handles away from that. The double bottom does look nice temporarily, but here's the problem. NASDAQ's looking the same, inverse head and shoulders, until you start breaking 12, 112, 128. Russell, not exactly the same exact setup, but again, very, very big levels there at 1807. My call is that we probably reject that. Even with Opex, even with possible short squeezes, I think we do form this head and shoulder as long as we stay below the neckline of 39.50 or the shoulder line if you want, and we'll come back down. Not too much. I think we do break here around 38.50, and we'll see if we continue down that way. I don't think we'll get down below 3,800. That's a tall task, but we really don't know how bad it could be. It is nice this morning, but again, until you get to 39.50, it's just a mirage. Good morning. Hi, boss. I know you're not buying stocks yet. What would be the price for you to add on Microsoft, AMD, and Palantir? Just to make it all even, again, it's just easier just to go by the index, 37.50. Now, granted, Palantir has been bouncing, which is nice. And we talked about that yesterday. Are people starting to take a little risk on in terms of the smaller cap, aggressive growth? Or is it we're just getting shorts unwinding their positions? Well, I don't think shorts unwind their positions for multiple days. I mean, Upstart's been up for a week. Now, again, it could be to the point that it was really, really, really shorted. Sure. But I think going by the indices gives me a broader range of the market. 37.50, that's when I'll start looking at Palantir, Microsoft, and AMD. The problem is everyone kind of wants a specific price. Go by the indices, gives you a broader index. Sure, you won't get expected numbers, or like it won't go exactly to the T with Microsoft or AMD. But if you take a look at it, AMD, let's go ahead and break up the daily. I'll throw in some levels that I'm looking at. 82.75, big support. I'll look at that for AMD. I also have Microsoft on the 2-year. Really the next level, really the breakout level is right around 238. So you can go a little higher than that, but I think 238 seems about right. And if we go to Palantir, which I do love me some Palantir, you can see basically we got to 648 and we bounced. There is a gap to fill right here at 939. Keep in mind on the weekly. We go to the daily chart, that gap to fill is there. So just be careful buying. Again, we're filling a lot of upward gaps. It doesn't mean it continues. It doesn't mean it continues. And people have asked me, well, Carlos, why do gaps happen? Why do gaps happen? What does that mean? Gaps is the market repricing due to an event. So there's kind of an imbalance. They don't know how to price it, what we call price discovery. So again, it gives opportunity for traders to kind of get into that imbalance. I would say about 80 to 85% of the time, gaps do fill eventually. So again, always keep that. If you need to do some chart work, gaps is a good start. Let's take a look at Tesla. Obviously, a lot of bad Tesla news coming out, but the stock is green today with the overall market, which helps. So bring up the daily. You start really near support below 700. 653 gets you back to around July 2021 levels before that massive breakout of October earnings. So 653 would not be a bad level to start buying as well if you're just Tesla centric. Have you sold at all? Would you like to start hitting lower lows? I have not touched anything. If I could be completely honest, I still have TQQQ. That's red. Haven't really done much in terms of stocks. If anything, just buying. Just kind of letting things go as it goes. I still bought my SPY-G yesterday. That hasn't changed. Consistency is key. I think of it kind of like going to the gym. Rain or shine, you're still going. Rain or shine, I'm investing. That's how I go by. So not much moves. I mean, I did buy some Merck. I remember I bought some TLT. There's some other stocks that I have my interest as well, but nothing yet. Not putting tons of money to work. And I do have some cash ready to deploy, and I'm just being tactical. Just want to wait and see when is the level where people start throwing the towel in? When can the buyers come back and say, hey, this is a value? Let's go to Amazon. Another question here. Amazon is testing the 23.6 Fibonacci level on the weekly, the level you're going to buy. And I know this is a crazy one, 1624. If you can get Amazon at 1624, that PE multiple drops, definitely be worth it. All things being equal in terms of earnings. Remember, we always talk about valuations. Valuations are important. What you pay for is important. What did they talk about CNBC last night on Fast Money? Valuations, because it matters, especially in a bear market. It depends on what you want to buy. Again, a Lamborghini is nice. Love Lamborghinis. Don't get me wrong. I'm not paying $1 million for a Lamborghini Huracan. 100K, yeah. But again, it's still the same asset. It's just about how much are you paying for it. Tesla puts for today in terms of levels. Ooh, Tesla puts can be expensive, mind you. And again, you have Opex today. Very, very difficult to trade. I would stay a bear here, if anything. Yeah, I mean, you do have some upside gaps. There's one right here, right at 863. You're probably not going to get there. This gap was filled. So really, the level you're looking for is a break of 700. Break of 700. If we accelerate a little more down, maybe give yourself a little room of 691. But be careful. 680 is that wick low. If it starts breaking that, those 700 puts, those any kind of puts will pay, because once you start breaking that big support level of 700, definitely the sellers will cascade and it will start accelerating forward. I mean, pick your reason. Tesla's definitely with Elon Musk in the news, Twitter. Now there's sexual harassment allegations. It's just getting a little crazy out there. Again, it's allegations. I always say this: innocent until proven guilty. I am not sure. I don't know what the hell happened, but it's not a benefit for the stock either. Regardless if it's political or not, I mean, this is the problem. What happens with Elon? I mean, he puts himself out there. This is what's going to happen. He's going to start making a lot of enemies. And I understand, hey, he's an American. Why does he have to hide, free speech and so on and so forth? Listen, if you want to discuss politics, that's one thing. I'm just talking about how you and I can make money off this and being a Tesla shareholder and what that means for us. Yeah, I'm all about, I get you want to be some arbiter of free speech, but unfortunately, when my glasses are on the stock market or on my views on the stock market, I don't give a shit about free speech. I care about this. I care about just taking opportunities. And right now, all this happening, granted, the market is coming down, so it's not a Tesla issue. But again, it's not helping. It's not helping the cause. Maybe the shareholder, maybe I'm the minority, where a majority of shareholders are applauding Elon to keep going. I don't know. I like my CEOs like Satya Nadella and Tim Cook. Quiet, just get the job done. I don't want my CEOs to be celebrities. That's just me. Hey, Carlos, with oil prices going up, does it benefit oil companies with their stock price rising? Of course, oil being their commodity, it's always important to oil companies. So you could see that crude oil today is pretty much flat-ish, and yet we're a little higher on XOM, breaking above that resistance of 91.51. Do I still like oil to the upside? Of course. I think oil is fine. I would just like a little bit of a pullback on crude in terms of getting in. Maybe we can get below $100 a barrel. That'd be a nice setup to go ahead and get long on some energy names. And there's some cheap ones in terms of PE. But again, I wouldn't want to buy it at these elevated levels. Just not yet. No, I want to get a good deal. Now, again, they are cheap, but we can get cheaper. I think we can. Hey, all it takes is one peace treaty. All it takes is supply chains to get back in line. And guess what? Oil's going to come back down. And I don't want to be holding that, hoping that oil prices bounce back up. Keep in mind, XOM, CVX are trading at around 1046, 1195 forward PE, COP 950. Again, these are all cheap and they all make money. Now they are. So again, not a bad place to park some money and get some dividends. Sure. Morning, Carlos. Thoughts on how Ross earnings may affect the market like TGT and Walmart? Well, again, that's going to affect the staples. It's not going to affect the whole market. Really, the big part of the market is tech. But let's go and take a look here at 1 day relative. Let's go to the week performance. And we can go to consumer defensives. The cyclicals, Ross stores, Walmart. I would say that's more of a Ross thing because look at TJX. They're up 9% and they're in the same space. So again, for them, it was all about margins. Ross stores, I didn't read the report. I don't own them or anything like that. Look at Nike. Nike near the back to not pandemic lows, but pandemic levels, down about 1.35% just this week. But really the ones that got hit, Walmart, Costco, Target, Dollar General, Procter, again, these were expensive. Again, they're not bad companies. It's not like Walmart lost money. It's just they're slowing in terms of inflationary pressures. It's hurting them. Is that worth 20% of their market cap? No, I don't think so. I think it's worth the shot to buy Target since it's cheaper than Walmart, personally. But I'd wait a little bit longer to see if I can dip my toe into some Target. Let's see if we get to that S&P level that I've been waiting for, 3750. And then we can start taking a look at Target, which by that time will probably be an 8 PE ratio or a 9, single digit PE ratio. Very, very cheap for a good run company. I mean, so far the consumer has been okay. I mean, they're still shopping. They may not be shopping for discretionary items per se. Obviously, groceries, gas, the basics, but it's not like they're not shopping. It's not. No one is saying there is no demand. What they're saying is trading down of brands, inflationary pressures, margins are going down. That's really the only thing. And that's pretty much, we talked about the last year to drop, home values were a big part of it. The consumer, if the consumer throws in the towel and demand is dead, the only silver lining there is that the Fed will probably say, okay, our job is done here. Our job is done here. We're not going to raise rates. But they haven't even started quantitative tightening, meaning selling those bonds as of yet. So again, there's a lot more headwinds, meaning bad news to come than good news. So again, we need something positive to come out before we can start really saying, hey, possibly this is a bottom. Remember, in March, we had that nice bounce to around what, 4,500? And that was sold off. That was 600 handles ago, guys. You could definitely get another downturn, so don't be surprised. We need something good to happen. Now, alternatively, you could say, well, Carlos, we're pricing and pretty much everything is bad. That makes the market cheap. We can get cheaper. Again, we're talking about historically. PE ratio right now if the S&P is around 18 forward. Around the median is around 16, 17. We can start getting there, especially with higher yields. Keep in mind, if yields were lower, then I would adjust, but we're not. We're still at 2.8%. If we could start dropping a little bit of yields, bonds start buying up, maybe we get to 2.6, 2.5%, then you can reprice and it makes stocks more attractive. But the bond market is telling you, especially with bond yields coming down, inflation might be peaking. We may be getting rolling over pretty soon. Now, you're probably saying, well, Carlos, which is a bear market, bull market? I'm giving you scenarios because no one really knows. It's tough. Right now, the price discovery in the market with such low liquidity and such low volume, it's tough to get a proper price. And you're starting to see spikes up and down because no one knows where we're going to go. Short term, long term, everyone has an idea, but short term, there's a lot of bounces and there's a lot of landmines. So you just have to be careful. Very, very important to think about those things on a macro environment. All right, guys, we'll leave it there. Have a great rest of your afternoon. Make sure 3950 is your alert there. Make sure on NASDAQ futures, 12128, on Russell futures, 1808. So again, that neckline is key. I'll keep you guys up to date on the blog as always and on Twitter. Have a great rest of your day. We'll catch you guys later. Cheers.